Good day, investors. My name is Lawrence, and thank you so much for watching this channel. A channel talks about investing in stock market and also talks about how you can be financially independent. If you're new to this channel, please consider subscribing so that you don't have to miss on other new uploads. Talking about subscribing, normally these days I check the metrics and I discovered that actually more than 80% of you viewers are not subscribed to this channel. In a special way, I would like to ask you, to humbly request you, if you're not subscribed, please to subscribe, comment, and also share these videos so that other new viewers can benefit from these videos. And if you're returning subscriber, thank you so much. Before we do anything else, definitely today I'm recording on 31st, the end of year 2024, and in special way I would like to wish you a very happy new year 2025, and I wish you to be financially successful 2025. Definitely I would have cheated you if I did not talk about one of my favorite aspect of investing in stock market, and that is dividend investing or dividends. So today I'm going to be sharing you the top dividend stocks that made a lot of money when it comes to paying their shareholders in 2024. So what basically is a dividend? Most of you or some of you may not be knowing what is a dividend. So a dividend is the payment that a company that is listed on stock market pays to its shareholders, definitely as a thanks or as a benefit to the shareholders who are having shares in that company, and this is most of the time part of the profits that the company made. Definitely some companies don't make profits and pay dividend, but this is something also to discuss about. So basically that's what we are going to be discussing about, and also why it is very, very important also to invest in dividend paying companies. So why would someone even invest in a non-dividend paying stock compared to a dividend stock? So actually, most of the dividend stocks are profitable. So you are sure if you're invested in a dividend stock, it will be profitable. But as I said, few companies pay dividends when they are not profitable. So always look for, of course, those companies that are profitable. So that's basically the main reason why personally I don't invest in any company that is not paying dividend. So let's directly go to the top 5 dividend paying company. So actually, before I dive deep into this BAT number 5 company, I will just want to talk about few phrases, few words that you will be hearing when it comes to dividend, and actually they are deal breaker. They are very important because they affect your earnings, they affect your percentage. So number one word is book closure date. You'll be seeing it everywhere when it comes to dividend. So what is a book closure date? So this is a date that when you're a registered shareholder, when they close their books or their register, you'll be able to be paid a dividend. So for example, we are talking of this company BAT. The company paid interim and also the main dividend, but most of the time the interim dividends, they are minor, so they don't affect the price so much. So the main important one is when they pay, for example, this 45, which was 20. You can see here they have two dates, 23rd and August 30th. This means that the company paid twice, but the main one is always the main dividend. You can see it has 45, and 5 means on 23rd it paid 45, and on August it paid 5. So on 23rd, all the people who were shareholders by that time, it means they will be assured that they will get their dividends. But for example, on May 24th, if you sold the shares, you could be, if you sold shares on 24th after 23rd, you will still be able to get your dividends. But if you sold your shares on 23rd, you could not get your shares, because by end of the day, you will not be a registered shareholder. That how is very important. Why is it very, very important to know the closure date? Because I can tell you after the closure date, some stocks go lose as much as 10 or 15%, depending on how much dividend they are paying. So that's a very, very important concept in terms of dividend stock. Another very, very important phrase or concept is the dividend yield. So dividend yield basically is the percentage dividend or the percentage dividend you will get in terms of your share. So basically, if the share, for example, is 408, out of 408, when they pay, for example, this 50, how much out of the share are you getting? So it means it's 12%. So for example, why is this concept very, very important? There are other investment options where you can get less than percentage, or you can get more than percentage. So you're able to compare with other investment options like money market funds, treasury bills, treasury bonds. Those are the main comparisons. So for example, most of the treasury bills, treasury bonds, dividend, money market fund, they are always between 10 to 12. So they are almost the same category. So before doing this, before buying a dividend company, you'll be able to compare and know where you want to put your money before making any decision. So it's very, very important also to know the dividend yield that the company is giving before doing any investment. So another important aspect is earning. Earnings is as straight as it is. Earnings is the amount of money that the company makes, or a profit that the company makes. It can be a profit or it can be a loss. So if it is earning, make sure that it is a profit, because some also loss paying companies, they can pay profit. They can pay dividend using maybe the previously earned money in the maybe last financial year, but is always a negative sign or a red flag when you see the company did not make profit but is paying a dividend. So basically that's what earnings mean. What is a payout ratio? Yet another very important concept or phrase. So payout ratio is the amount of money, or the percentage amount of money that the company pays out of its earnings. For example, let's say be it Kenya and 100 Kenyan shillings, and it paid 90 Kenyan shillings. It means it paid 90% of its earnings to the shareholders. So we can say 90% is its payout ratio. Why is the payout ratio very important? Actually, this is one of the extremely very important ratio, especially if you're new to investing, because payout ratio is always catches the red flag that the company is trying. Sometimes the companies try to induce investors to invest in the company because it is paying profit, even if it is making loss, or sometimes it will even pay 100% of its profits. So why is it very, very important to know how much the company is paying as a payout ratio? Because companies, when they are growing, or when they are running operations, when they make profits, they need to retain some amount of profits so that they can invest in new ventures, and also they can also maintain their business. So if they are paying 100% or 90% of their earnings, it means they are not able to expand more, they are not able to do much, because out of their earnings is where they can expand or they can do more business. So basically those are the, I don't want to go much into, but these, if you know about these four main concepts in terms of dividends, you'll be ready, you'll be safe to invest in dividends. So number 5 top was BET Kenya, as you're seeing. So how did we calculate to know that it was we got 12%, 89%? So basically dividend yield, as we said, this is the percentage of dividend out of the pricing. So if you get your calculator from here, the way you calculate, you get the dividend, which will be just remember, if it is a dividend yield, it is calculated as a percentage. So it will be 50 divided by, this was the closure date price, just remember that, times 100. So that's how we got our 12.25 basically. So it's always the dividend that is paid divided by the closing price by that time, the closure date, book closure date, multiplied by 100. That's how you get your dividend yield. So basically, and how do you earnings? You go straight to the earnings of that year or end of the year. Then you go to payout ratio. So how do you calculate the payout ratio? So basically, the payout ratio, you get to dividend divided by earnings. As I said, ratio is always also expressed as a percentage. So you get 50 divided by 55.68 times 100. So basically, that's where you get 89.79. So this is how we did our calculations, and also that's the standard way of calculating this payout ratio, dividend yield. So it's extremely very important, as I said, to note these concepts, especially closure date, dividend, of course, dividend yield, and also payout ratio, because they will also determine much at how company makes its business, and also how much also you earn out of your investment. So this is number 5. So BAT, as I said, is a cigarette company. So what is my take on this percentage? The percentage is, I can say, it's a good one, extremely very good. Actually, you'll find very few companies, because you can, out of more than 620 companies on Nairobi Securities Exchange, BAT was number 5. So that's how to show that 12% is not easily made, is not easily given out as a dividend yield. So as I said, it's also top of other dividend on other options like money market fund, treasury bonds, treasury bills. So if you get a 12%, definitely it's a very very good yield, and I can recommend, if you have any company within East Africa that pays 12.5 consistently, this is for 1 year. So if you're going to invest in any dividend paying company, I recommend you go to its history 5 years to see whether it pays regularly or it's one of time. Companies that don't pay so often, I don't recommend them, but the company that pay severally, I recommend those companies, and this is giving you 10, literally 10 and above. This is a very very good company, because dividends, if the company is making profits, the dividend grows over and over time. So basically, that's what I can say about BAT. People, cigarettes are addictive, so most of the people will be smoking cigarettes. The only thing is, most of the East African companies, they keep raising taxes in order to ban smoking. So that's why I don't smoke, so I don't literally invest in BAT. But if you smoke, just know your people are addicted to smoking, so they will keep smoking, and the company will keep making profits. The only thing that reduces the profits, as I said, it is only the governments keep on increasing price. Keep increasing taxes to increase the price of the cigarettes at the end of the day, to discourage people from smoking. But smokers are addicted, they will keep smoking. So if the company makes sense for you, this is a good company. But as I said, always make your own thorough research before investing in any other company. So another top dividend paying company that made to the fourth, it was Stanbic Bank Kenya. So Stanbic Bank Kenya, basically, as I said, it is a bank, part of the Standard Group Bank of South Africa. So basically, nothing to say about it. Is one of the best managed banking companies in Kenya out of many companies that someone should be proud of owning. So if you're proud owner of Stanbic Bank Kenya, this was one of the banks that made it to our top 5 dividend paying companies. So book closure, as I said, it's the date which if you're the owner of the bank, you'll be able to get paid dividend. Basically, it also paid twice, but the significant date is 17th May because it paid 14, and this also it paid interim dividend. Dividend yield was 12.7%. Earnings, maybe I'll repeat once again. So for the dividend yield, as I said, as expressed percentage, you get the dividend 15%, 0.84 divided by this is the stock price by the book closure, divided by 125 times 100, so which gave us 12.67 percentage. This was the earnings. Earnings basically, as I said, that's the profit that the company made. So also the payout ratio, as I said, it will be the dividend, which will be 15%. 15.84, which was Kenyan shillings, divided by the earnings 30.78 times 100. Yeah, basically, as I said, 12%. Actually, any company is paying 10 to and above percentage. It's extremely very good because the average inflation within East Africa, it is always between 5 to 10%. So if you're earning 10 and above, it means you're okay because you're beating the inflation, and also you're beating other investment options that are available within East Africa. So the payout ratio, extremely very, very important. Actually, on BAT, we didn't talk about the payout ratio. It is paying 89, almost 90% of its earnings. It means its gross capacity as BAT is limited. But if you see the Stanbic Bank, it's paying 50% of its profit. This is a very extremely very healthy, if a company is able to pay 12% and is paying half of its profits, this is a very, very good sign that actually it's able to pay and also able to grow its revenues, maybe to expand, to do other developments. So if a company is paying 12% and is paying 51%, it's extremely very important. So what should I do? What should I say about Stanbic Bank? As I said, now it actually price has increased up to 140%, up to 140 Kenyan shillings. So as I can say, the price already has gone up. So if you're going to buy it today or tomorrow, you'll find that the percentage, the dividend yield has declined. So definitely, as I said, is one of the best managed banks in Kenya. So if you're going to buy it, as I said, do your own thorough research, and also, as I said, and currently the bank stocks are skyrocketing. They are going up, and I wouldn't recommend anyone buying at this moment because you wouldn't get a value for money. So that's what basically I have to talk about the Stanbic Bank Kenya. So let's go to number 3 best paying company, which is Kenya Power. Of course, it is surprising if you didn't see my best performing companies 2024. You need to watch it and see what I said about Kenya Power. For the past 7 years, I think it has not been paying dividends, and for the first time, it paid 0.70, and it made us a top number three in terms of paying highest dividends. So basically, it paid the book closure date was December 2nd, and it paid 4.5. I mean, this is the price by that time. Then it paid the dividend 0.70, and when you calculated using our formula, I'm not going to repeat it. It did give us 15.70, and the earnings was 15. Payout ratio was 4.5, because actually you can see this is also, if it is paying 4.50, as I said, actually Kenya Power is a very indebted company. It has a lot of debts. Actually, most of the shareholders, though they were happy for the dividend, but they were suggesting if this money could have been paid to recover the debts, it would have been nice, because when the company is indebted, definitely it will be paying interest on the loans. Because recently I was even seeing that actually the Kenya Power was fined for late payment to KenGen. So you can see that though it paid a dividend, it was just to increase the price, which increased actually, because it was around 1.4 when it announced the price. It went skyrocketed to 4.45. So basically, nothing to talk about Kenya Power. Kenya Power is definitely is a Kenya's is a monopoly. Actually, it distributes power. So, but as I said, also me, I'm not invested in Kenya Power. I sold the shares some time back because I didn't like the way they were managing the company, and it was not paying the dividends. Me, I'm purely dividend investor, so I'm not invested in it. But if you see the metrics, 4.5 ratio, it's paying 5% of its earnings. This is extremely very important. If the company was well run, if the company did not have a lot of debts, this was a very, very good percentage. But as I said, most of the earnings it is making, it is paying debts. So, but under normal circumstances, this is a very, 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 very healthy payout ratio. This is extremely very healthy dividend yield. So if it keeps on this rate, definitely I will see if I could invest it. But for now, it's there. I'm not invested in it. But as I said, if you're going to do any investment, please make your thorough research so that you don't make mistakes, because investing carries a very high risk. So basically, that's it. Let's go to a company that made it to top 2, and that is KenGen. So KenGen also related to Kenya Power. This is a company that generates power and mainly sells it to Kenya Power. So if actually KenGen most of the time makes profits, also Kenya Power also sometimes makes profits. So actually, instead of investing in Kenya Power, I would rather invest in KenGen. KenGen is also government, Kenyan government company, but it is well run, and also mainly it does not make much losses, because for it generates it and sells it to Kenya Power. So it also made whooping 16.30, and actually this is extremely, because there are very, very, very few companies that make 16% a year. So if you have a company that is well run, that is well managed, that are making profits and makes 16% as a dividend yield, just run and put your money. As I said, most of the companies that are paying 16% and above, they call them as traps, dividend traps. They're not making profits, but this company, I've been following it. It pays, and also it's a very well run company. So as I said, book closure was November 27th, this was the price by that time, 3.98 Kenyan shillings. Dividend was 0.65, dividend yield 16%, earnings was 1.03, payout ratio was 63.10. You can see also it paid almost half of its earnings, which means KenGen retains amount of money to do some research, because exploration, if you're generating power, you need to do some exploratory works, and also some of the exploratory works may not be positive. So, but if it is paying 63% of its earnings, this is a positive sign, because it will retain more money to do more of its work. Basically, that's what I can say. So let's go to number one, and that is Umeme Uganda. So I know much about Umeme Uganda because I'm a Ugandan. So I know much about Umeme Uganda. So I converted into Kenyan shillings because I'm talking of Kenyan companies. Umeme is cross-listed on Kenya Securities Exchange, so it's also listed on Kenyan stock market, which is Nairobi Securities Exchange. So basically, I'll have a lot to talk about Umeme Uganda. So book closure was June 28th, 2024. Actually also paid twice, but I didn't want to do all the thing. It paid, this was the pricing in Kenyan shillings, 15.45. The dividend was 2.6. Then the dividend, it paid, dividend yield was 18.51. Then the earnings was 0.25, and the payout ratio was extreme, 1,144%. This is something to talk about. So if you don't know about Umeme, Umeme is also a Uganda's energy distributing company. However, it was given a 20-year concession management license for managing the Uganda's electricity and also distributing it, but the government of Uganda announced that they are not adding any other contract. So, and their contract is expiring 2025. As if you ask me, do I know what is going to happen to Umeme Uganda? 100%. I don't know. Actually, last year I made a video sometime back talking about Umeme contract expiring and what will happen, and I warned the people not to invest in Umeme because not only being poorly managed, it also, as I said, their contract is expiring next year. So I don't know, reiterate to the investors who are invested in it, what is going to happen. Let's pray that it's not dissolved and people don't lose their money. But as I said, please, if you're not yet invested in this company, try to avoid it, because as I said, their concession is expiring. I don't know the modalities on how people are going to be refunded, so I don't know much about it. But as you can see, they did not make enough profit this year, so what they did, they had to pay investors from the previous profit that I made. And this is also one of the red flags. If the company is not making profits, basically it should not be paying dividends. But this time they paid even dividends, payout ratio of 1,000. They basically paid 1,000 more than they earned. This is a very, very red flag. And as I said, personally, in my personal opinion, no one should be investing in Umeme. If you're also an investor, you can hold the shares, because I know the government of Uganda is going to compensate the Umeme Uganda, and I think that money is going to be distributed among the shareholders. So Umeme, as I said, if you like long-term investing, please, I would recommend that you avoid it because of the reasons I've given you. Their contract expired, so 2025 they will be closing the company, they will be closing the business, and it will go back to other Uganda Electricity Distribution Company Limited that will be managing them. Because Umeme did not own any assets, they only manage the assets of Uganda Electricity Distribution and also electricity management company. So basically, that's what I can say about these 5 companies. So what do I have to say about the dividends? As I said, if the company is giving you 10%, it is well managed, it is paying, I recommend at least 70%, 80%. If it is a big company, it's a very good percentage. If the payout ratio is more than 80%, try to go deep and see why the company is paying 80%, especially if it is still in the growth stage. But if the company is mature and you know that it has no more growth potential at paying 80%, that is very good. But if you see the company is growing, especially in our East Africa, because all the companies, personally, I categorize them as growth because the countries are growing. So basically, any company that is within East Africa, it is growing company, and you find it is paying more than 80%. I don't like the companies that pay a payout ratio of 80% because they don't have enough capacity to grow more. So basically, these very ratios and also these phrases are very important if you're going to be investing in a company, basically for dividend. Thank you for watching. If you have been with us up to now, once again, I would want to request you, if you're not yet subscribed, to subscribe, to share, and also like our videos so that it can also be recommended to other new viewers who want to invest in stock market. Thank you so much for watching. Have a wonderful day and Happy New Year 2025. Goodbye.